do you have any success stories in the market that you would like to share?
How long do you have?
Oh, okay. Hi everyone, welcome back to my channel. My name is Reni. Thank you so much for joining me today. I really appreciate you taking your time to watch this video. So today I have my dad here and we're going to do a video about investing 101, but answering the questions that you left us. So I asked you on my Instagram is xoreni if you want to follow me. I asked you guys to send me questions and I got quite a bit of questions. So we're going to answer them right now. And do you want to say hi?
Hi everybody.
First question is, how much would you say is ideal to put down for investments as a beginner? And where is the place to begin?
And that's a big question. We always have to start off by saying that we're not investment professionals. Consult with your investment advisors. We're just telling you what has worked for us. Going on the assumption that you've paid off your credit card debt and you're in a job, you have some money, for example, to invest. The minimum that I would suggest that makes sense is a 10% of what you earn. So if you're a faith giver, for example, and you pay a tithe, the next 10% should be invested in the stock market. If you earn $1,000 a month and you tithe, and then the next 10%, that's $100, you actually invest in the stock market, you have an opportunity to grow that money. I do recognize that there are lots of other people who can afford more than that, but the barest minimum I would suggest is the 10% of what you earn.
To further explain, you don't need so much money to invest. A stock can be $50, a stock can be even $40, $30. So if you can only buy one stock, that's a good start.
Start from where you are.
Next question is, should one invest in small increments or all at once?
It depends on the market, and there's no one straightforward answer, but if you have $100, I would say you invest the entire $100 in a good quality, solid company.
Sorry, if you have $100 to invest.
To invest.
Yeah.
That's, you invest the entire amount. If you had $100,000 to invest, as an example, and most of us I recognize don't have that kind of money, what you want to do is you may want to invest perhaps a quarter of that. And then the next month you invest another quarter, so you're drip feeding the money into the stock market just in case things change. I
want to highlight there are always risks with investing.
Absolutely.
Your investment can always go down, so you don't want to put all of your money into an investment assuming that it's just going to skyrocket, because that's not always the case.
We also have to make you understand that you invest for the long term.
Yeah.
This is not a quick money making scheme. This is not something that you put in money and immediately you start making money.
Yeah.
You invest for the long term. It's the time in the market rather than the timing of the market.
The next question is, what are the best investing apps for Canadians, especially if they're choosing to invest in a US stock?
Okay, so there are many brokerage platforms. You could use one that is run by your bank. I recognize that there are people who are not Canadian. So Toronto Dominion Bank has a brokerage arm called TD Waterhouse. You can use one of the main banks, is what I'm saying. In addition to that, you don't have to use a bank. There are other independent, non-bank affiliated apps that you can actually use, such as Wealth Simple and
Questrade.
Questrade.
What are the risks of investing, and how does one invest safely?
Okay, the risk of investing is that you could lose your money.
Yeah.
It is what it is.
It is what it is. Whether it's in the stock market, whether it's in the real estate market, you could lose all your money.
In any investment.
In any investment.
Yeah.
The way that you invest safely is you actually do your research. And you do your research by understanding, first of all, you are buying into a company. You're not buying a stock. So you want to deal with a company that has good, solid management. Management is critical, okay? That are visionary thinkers, that are ethical. You want to do your research, and fortunately, this device over here gives us a lot of information. You can Google a lot of information about any company that you're interested in.
Yep.
For example, if you're interested in a stock like Chevron or in Petro-Canada, you can find out a lot of information by, again, Googling that company. So you're looking for good management. You're looking for companies in great sectors that are in secular demand. You're not dealing with cyclical companies that make money today and they go bust tomorrow. As an example, we're in the midst of a pandemic and the oil companies 5-6 years ago, they were good to invest in. Not today. The world is moving away from fossil fuels. So look for the sector, look for the management, look for what they have done what the company has done in the past, and see through their management reports and reports to the market what the projections are for the future. You want to buy in a company that is on the way up, and here's a statement for you. You want to buy good, getting better.
To further explain what the risk of investing is, just so it's very clear and blatant, when you invest in a company, so say I invest in Costco and I buy the stock for $50, it's not $50 anymore, but if I buy it for $50, the stock can either go up, so it can go to $60, it can go to $70, it can go to $80, or it can go down, it can go to $10. Book cost is $40 that you purchase it at, but the market cost is what you can sell it for.
Right.
So if it's only at $10, then now you've lost $30 once you sell it. It can also go up to $300, and you can sell it at that market cost as well. So that's the explanation of the risk.
Okay. In addition to that, talking about good companies, you're also looking for sometimes companies that pay you a dividend.
Yes.
A dividend is like the rent you get when you own a piece of real estate. So in every quarter, the companies report their earnings, and they will say we did great or we did good or whatever, and there's a particular amount that they would distribute. If they're mature companies, there's some companies that don't pay dividends called growth companies. Those are companies that the share price typically appreciates at a faster rate because they're in their growth phase, as opposed to paying you a dividend.
Where would you research about these companies and I know you said Google, but are there specific tools that you use to research?
Right. So where do you research? There's a wealth of information on the internet. My favorite is called the Motley Fool. I read articles every single day, Saturday and Sunday not excepted. There are other sites in Canada, for example, like BNN, Bloomberg. Bloomberg is one of the biggest ones, and in the US, CNBC. You can watch them on the TV.
I don't know if anyone watches TV.
Okay, you can also play them back on your smart device.
I also say if you are a user of Reddit, there's a great Reddit thread called Personal Finance Canada, and since a lot of information that you see online is specific to the US, this is a great tool because everything is focused on Canada. What is the difference between long-term investing, swing trading, and day trading?
Long-term investing is what I recommend. When I say long-term, I'm really referring to something that you buy and you hold for minimum of 2 years, preferably even longer. Swing trading refers to you buy a stock, you sell it maybe in a day, maybe in a week, maybe in a month. So you're looking for these swings from what you buy it to where it goes to. So for example, if you buy a stock at $10 and it goes to $12, say within a week, as a swing trader, you can sell it to get the $2 profit off that stock. Whereas the long-term investor will buy and hold and hold and hold.
Until it gets to $30, for example.
Or $40 or $50 or whatever. The day trader is a person who, just like the swing trader, just like the investor, has opened up a brokerage account, is also buying multiple times, sometimes in the space of 5 minutes, is bought a share and is sold a share. So these are people who probably have hundreds of thousands of dollars in their account, maybe even less sometimes, but they are constantly trading, and I would not recommend it because ultimately you're paying a lot of brokerage fees and it's very close to gambling.
I would say that if you have lots and lots and lots of money, maybe day trading is for you, but you also need lots of time in order to do this. Like, you need to be on your phone trading all the time if you're going to be day trading. So for a beginner, I would emphasize long-term gains are what you want to do. Why doesn't everyone invest?
Good question.
Because not everybody knows about the potential of the stock market. Not everybody has been taught about the benefits long term of the stock market, and a lot of the media talks about stock market crashes.
Yeah.
And people are afraid, I'm going to lose my money if I invest in the stock market. Whereas the reality is that the stock market goes up, stock market comes down, but long term, the direction of the market is up.
If you have multiple investment opportunities, but
Okay.
only can choose, you only have enough money to choose one,
Okay.
which one should you choose?
Again, that's another very personal question and very personal investment choice. But the reality is that we all, every day we make a commitment, whether it's to real estate, whether it's to the stock market, we're dealing with choices. Your own personal choice is, I'm going to have $50,000 to invest as an example, or $10,000 to invest. I'm going to invest in the stock market. What do I invest in? Look for the market leaders, right? Because you're going to have in the NASDAQ and the US stock market has over 5,000 companies. You can't invest in 5,000 companies. So you got to look for where the market leadership is. Look for the market leaders, and what I said before, look for good, getting better, not fishing at the bottom of the ocean.
That is 2 years unrealistic to expect my money to grow immensely.
Immensely to you, it may mean something to somebody else, but 2 years is a good time frame generally to have seen the growth in your portfolio.
What are some key ways to keep track of your investments? Using a watch list would be a good way to keep
Yes.
track of your investments, or future investments that you want to, or future companies that you want to invest in. So a watch list is essentially when you choose a bunch of companies, you put them, it's basically a fake trading account, I would say, to watch their growth over time. So you can see when they reach a certain height or when they fall to a certain level. That's a good way to do it without even putting your money in. What would you say is a good way to keep track of them?
Well, the brokerage accounts usually allow you to keep a good track of what you bought, what price you paid for them, what the growth has been. It will show you in percentages, and they have really, truly terrific tools in there that will allow you to keep track of it. What I use personally, I use Google Financial, and that tells me and gives me all the information that I need, as well as my brokerage app.
And Google Finance is a great tool. All you do is search Amazon stock, for example, and it will show you Amazon stock 5 minutes ago, right now, a day ago, 6 months ago, the whole lifetime. So it's a great tool and it's very easy to use. Okay, one last question that we have is, do you have any success stories in the market that you would like to share?
How long do you have?
Oh, okay.
Well, okay, so let me just preface by saying that doing this for well over 30 years. I've had a stock when I was in the United Kingdom that I bought at, I think it was 19 cents, that went to 35 pounds.
Oh, wow.
And that was unbelievable. That was an unbelievable return. Most stocks don't behave in that way. In Canada, I've had the good fortune of investing in a company called Shopify. It's done very well from a very early stage to, well, it was below $50 when I bought it, and today it's over $1,000. Yeah. This only comes from thinking long term.
Yeah.
There are many opportunities to buy and sell and trade it and whatever, but the success story is a story of buy and hold and hold and hold.
Yes.
It's a story that I've taught my daughters, and it's worked very well in their hands.
Hey MTV, welcome to my crib.
So I've just given you two examples, but ultimately there are many, many more examples. And another company that I love is Microsoft. If you'd bought the shares of Microsoft about 18 months ago, 2 years ago, you'd have done easily 200, 300%.
Yep.
Who would have thought a mature company like Microsoft, you could still be getting that kind of return, and I'll still buy it today.
And a success story that I've had is Amazon. As we know, Amazon has been going up, and even during this pandemic, it's still going up. I actually bought it, I think last year at 1,900, and it stayed at that for a whole year, and I was stressed. I was like, oh my gosh, like, what did I do? I could only buy one stock, by the way, because that's all the money I had. But I bought one stock of Amazon for 1,900. I was stressed because it was staying there for an entire year, but recently during this pandemic, it's at $2,400 right now. So that took a year, but yeah, it's good growth. And that's because we invest in companies that are solid companies and that we understand their business model.
Right.
So I'm not investing in some aerospace engineering company that I don't understand what they actually do. I understand the basics of what Amazon does, and I believe in their business model. So
good, getting better.
yeah. If you have kids or younger siblings and you want to teach them how to invest, we can do a video on what you should teach your kids about money. So if you'd like to see that, please comment that down below and we'll definitely get that done for you. Thank you so much for watching. Thank you, Dad, for being on my channel.
Thank you.
And have a great day, everyone. Remember to comment, like, and subscribe. Bye.